Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 5th. It's Tuesday. We got some PMIs today, and treasuries are a little bit lower than where we left them yesterday. How are you doing, Win? Let's go and turn on the text-to-speech thing first. Here, must have had a really good breakfast this morning. I know, right? I was actually, I got distracted with a TikTok. I'll tell you about that in a second. But first, the charts. Oh, I pulled the chart up. Why is it not up? Okay, there we go. Okay, so I just want to note here with the S&P 500 here on the daily chart, we've starting to see the 100-day moving average being really hard resistance. That doesn't mean that we're not going to pop back up against it. Just note that there are a lot of automated mechanical strategies out there that very much watch this line. So you're going to want to keep an eye on that. So basically, 43.50 or so. 43.50 seems to be like hard resistance in the S&P 500. If we get above that, that would be a really big move up today. But if we got above that, that would be very bullish. Coming over into ES on the volume profile, you can see pretty ugly drop yesterday. pretty ugly drop yesterday. They did not beat out Friday's lows. Maybe a little bit higher today. Treasuries were a little bit all over the place. They pushed the downside, they pushed the upside, came back to balance. This morning pushing the downside, but only a little bit. We have some PMIs today, so that's going to be the big thing I think the treasury market's going to be watching and reacting to. Just note maybe a little bit of flattening. Well, not a little bit of flattening. We flattened yesterday. I mean, we flattened yesterday across the curve. Which does not necessarily. So when we were pushing lower, note that when we were like really pushing lower in the ZB, that we were actually got some steepening, right? So for it to be flattening here is not necessarily saying this is going to be another leg or anything like that, right? We're kind of in wait and see mode. Oil doing really well yesterday with OPEC coming out. There's lots of things you're going to be looking at here now. Who knows where it goes, but looking pretty good this morning. Natural gas, not to new highs yet, but still looking pretty cray-cray over there, right? That is like an ascending triangle, man. Ugh, if this goes higher, where are they going to go to? $7? $7 natural gas? That's crazy. Okay. Gold doing okay yesterday, actually. But in all honesty, they're still just kind of hovering around this 1750 area, right? Same with silver. Silver was probably way oversold here. And copper did really well yesterday, but it's giving up all of its gains. So what's going on there? Well, I think that there's still a lot of concern about China, right? They had another developer default last night, that sort of thing. You notice, again, it's not like destroying the equity indexes, but they are having a hard go at it. So now if we come back over here for news today, we've got imports and exports here. Well, that's should just be coming out. You know what? I hate it when I don't get my little thing won't. Sometimes this window gets screwed up and I can't. The utility that I have that helps me snap to other windows doesn't work for some reason. I don't get it. Okay, fix that. But then later in the day after the market opens, we got market services PMI, composite PMI, ISM manufacturing business activity, and manufacturing prices at the 10 o'clock. And then ECB President Lagarde is giving a speech at 11 o'clock Eastern time. So we got some okay stuff to trade off of here. So far in the treasuries, they do look a little negative. Look at that. Look at that sneaky iceberg right there at 30. Good morning, Keller. Good morning, AO. So here's what I was replying to was there was this influencer saying, "Oh, like I totally believe in NFTs now." Here's the thing. At some point in the future, non-fungible tokens of some sort, or really smart contracts, will probably be used for you to like buy your house and things like that. Yeah, probably will. Here's the problem with what everybody on TikTok and social media are saying about it. They ain't going to be using Ethereum or Bitcoin to do it, guys. Right? When that day comes, they're going to be using FedCoin. They're going to be using whatever coin the central bank digital currency decides to set up. Which I don't know. Some people say it's going to be what is it? XRP. Right. I don't know if that's actually going to happen. I think that they're probably going to make their own, and they seem to be researching their own and doing it that way, right? And it's going to be a coin that they can control the supply of. They can go and say, hey, look, we're going to give everybody a little bit, you know, and they can just make coins and put them in places. That's what it's going to be. When that happens, what happens to Bitcoin? Okay, that was a pretty ugly down move. What's going on here? Hold on a second.
Block buy,
huh? Okay. That might stem the losses, but something just happened there. Looks like they're throwing their weight around early again, but 29.5 block buy. They are going to take it offer again. They're going to pull at 29. Well, I don't know if I want to be involved in this one. I'm going to sit back and be risk offer for a little bit here. Tell my story. Anyways, so when the Fed coin comes out, what do you think is going to happen? Well, all of this utility that people are getting out of it, right? Like NFTs, you're going to go and why wouldn't you go and do that on Fed coin? Is what we'll call it. We'll call it Fed coin. I bet you there's already a Fed coin out there, but we should call it the Federal Reserve coin, right? or Powell coin. Okay. People are going to use Powell coin. They're going to do their NFTs on Powell coin, which means that at some point in the future, all of these NFTs is like all these Ethereum and Solara based NFTs that are, you know, and websites, everything, they're going to be worth almost nothing. And you know, Ethereum probably will be one of the cryptocurrencies that has the most lasting power, but the entire cryptocurrency space is going to get absolutely crushed when FedCoin comes out, because there's all sorts of reasons for people to buy something, right? Remember, orders move markets. So we need to be able to predict why people are going to buy. Well, if all of the utility is taken out, that leaves you very few reasons left to buy. And if price is going down, oh man, if price is going down, then you've really removed a lot of the reasons that people buy Bitcoin, right? At that point, the only people that you're going to have left are the people that hate the dollar, that want, you know, the decentralized currency. You got to realize the vast majority of people that are investing in this, they don't believe in that idea, right? They're just trying to make money. And so there's this really big fallacy, I think, going on amongst the people in the cryptocurrency community where they think, you know, well, it's the fundamentals based on how good it is and all these. No, those only matter in as much as other people care about it, right? Because if there's no utility, it all comes down to future orders. FedCoin is an existential threat to the Bitcoin ecosystem, and the biggest Bitcoin proponents out there are like, just ignore it. They just pretend that it's not a problem, but it's going to be a problem very, very soon. A FedCoin will still be just as bad as the dollar, except for that the dollar is the strongest currency in the world, right? And this is the bigger problem that the cryptocurrency industry has, is that their entire premise is that having your currency handled by a government and a central bank is really bad, and that people want to get away from that. But the reality is that having your government issue your currency and having an independent central bank that manages that currency is the greatest financial innovation of the last 6,000 years, right? And when push comes to shove, when the Fed coin can do everything that the other cryptocurrencies can, I do not think that the other cryptocurrencies are going to be able to compete. Other countries will have to have some sort of Fed digital currency. Yeah, I'm sure. I think they all will. The euro will do it. Because like what they have proven is that there is value in being able to make transactions, and that there is a large amount of utility that you can pack into those transactions. That is what they've shown, really, right? So yeah, all of the governments around the world are going to include those, but they're not going to give control over the money supply, right? Frankly, if the money supply went over to a decentralized currency, it would be a big problem. Dollar surging in strength. Well, the dollar has been relatively strong lately. We're at like, what, 93.84? You know, I didn't even, when I was going through this morning, I didn't even point out, you know, when we look at it. Well, Bitcoin's had a pretty good run yesterday. Bitcoin itself trying to make a further rise, maybe a little bit. And the dollar recovering from the decline that it had yesterday. But yeah, I don't know. They all look like relatively minor moves in perspective. We are about to become insolvent. That's no. I think you're talking about the whole debt limit stuff, right? You're looking to buy ZN AO? But at a lower level than it is now. Facebook, we should talk about the outages at Facebook and Instagram yesterday. Well, so the thing that drives me nuts with the Facebook thing is there's a bunch of things going on with Facebook, and everybody is trying to conflate them together, which got, quite frankly, as a conspiracy theory. Like the fact that there is a whistleblower testifying at a Senate hearing today probably has absolutely nothing to do with the outage at Facebook yesterday. There's no evidence that we have to try and connect those two ideas together. And I was seeing that all day yesterday on TikTok. It drives me crazy. There's no reason to think that. But the outage itself sounds interesting. Oh, the outage itself sounds interesting. Because apparently what happened was they pushed out an update of some sort, and it totally screwed up their BGP routing. So basically what that does is it's basically like they have a tiny little network, and BGP explains like how that network connects to all of the other networks and all that, right? So when their BGP goes down, then their DNS doesn't work. Their DNS doesn't even show up. So to everybody that was looking at it and trying to figure out what was going on, it was basically like Facebook didn't exist. Like Like people were putting the domain up for sale and things like that. It was pretty funny. So we've pressed the dollar to its breaking point. It's at 94. Like, explain this to me. Explain this to me. Here's what I think you got to do. Here, which one is it? 60 right here. Okay, here we go. Here is the last year's worth of action. Okay, what level does the dollar index need to get to before it's a concern? Because here's the thing. I think that the dollar index could get down to like 50, because like that's what the dollar index was when it was first invented. Right? Like in terms of like a dollar fall, there is so much further to go, guys. So much further to go. What you saying here, AO? Oh, you made 750 this morning on ZN? From shorting it? No, you did not. Wait. I think you're full of it. You must have used multiple contracts. You must have been trading 3 or 4 contracts. Anyways, so the question is how. So then this is what I heard, that there was an engineer on r/sysadmin talking about it, and he was saying that they made an update to the BGP routing, and it screwed everything up. So they needed to go and get on. So because that happens, they're not able to get in remotely, right? Like if you're in your office or whatever, and normally you would go in remote into that machine and fix the configuration, right? Except for that you can't connect to the machine because it's like Facebook isn't on the internet anymore, right? So somebody has to go into the data center and connect their machine to those computers and change the BGP routing, right? Except for that the people that were there at the data centers couldn't get into the data center and didn't know how to change it. And that is why they were down for 6 to 8 hours. Can you believe that? Can you believe that? So the actual outage at Facebook is really interesting. You would think, oh, well, it wasn't, at least it doesn't appear to be a hack, but just an IT disaster. But the IT disaster actually ends up being really, really interesting, especially for somebody like me, which, you know, we kind of do that stuff. So there's going to be a lot of this move in at Facebook could change the way that a lot of IT departments do things, because they're going to go and say, oh, we have to have people at the data center that actually know what's going on. Isn't that crazy? How do you explain the anger about money printing if money printing doesn't present a threat to the validity of the dollar? Because people don't know what they're fucking talking about. I heard some people saying that the outage might have been, conspiracy theory. Yeah, what advantage is there to being down? Well, I think that the conspiracy theory is that you go down and then while things are down, you scrub all of the evidence or whatever. But I think that that's just absolutely ridiculous. What is the whistleblower telling us? What are they blowing the whistle on? Well, they're blowing the whistle on that Facebook knew that their algorithm was pushing people towards controversial content that was bad for their emotional and mental health, and Facebook decided to not do anything about it because they knew that fixing it would affect their engagement across the website. No duh. Like, for everybody that uses social media knows that that's what's happening. So he's not telling us anything that's new. So what could Facebook scrub? You know, like, if doing that is illegal, then why, I'm sitting here wondering, why did it take a whistleblower? If doing that is illegal, then the government should have been investigating this years ago, because we all knew that that's what was happening at Facebook, right? So the whole theory that you'd bring the whole thing down to scrub, it doesn't make any sense. If what they did is illegal, then they're just screwed, right? So I think that's what's really going on here is that there's a contingent of the far left that believes that Facebook is solely responsible for right-wing propaganda on the internet, and they believe that if they force Facebook and other social medias to censor their websites and delete misinformation, that right-wing propaganda will go away, which is not the case. But that's what's going on here, and the left is just as likely to latch on to a conspiracy theory as the right. And so they see a correlation and they go, something's going on. Facebook is not right wing, but that's what they think, man. I'm telling you. The anti-Facebook crowd is a very diverse group of people, but the most adamant ones are the far left. Which is funny because the organization and Zuckerberg himself seem to lean left, but they seem to be trying to be fair. That's something that I think is different from them compared to, say, Twitter. Twitter is not trying to hide their opinion at all. Facebook tries to hide their opinion, but just can't seem to get away from themselves. Facebook is actually putting a good faith effort into trying to be fair. They just really suck at it, right? And part of the reason why they suck at it is because it's kind of a difficult problem to deal with, right? They've blocked me for speaking out about religion. Oh, it's so terrible. Their whole system, Keller, is just absolutely terrible, because what happens is you submit a report and then some guy in India looks at it. Like they outsource this stuff because it's like a really stupid job. Like, you have any idea how many content reports Facebook get a day, right? It gets sent to some. They have robots. First of all, they have robots that kind of do initial screening, and then it gets sent to a person. And then at that point, it just kind of depends on which moderator you get. Facebook, do you mean the people who use Facebook or the company Facebook? That's a good point, because the audience, the Facebook user base at this time appears to be more right-wing. A lot of the left-wing people left, all the young people left, and you're left with the older people, and they tend to be more right-wing. But I digress. I'm more interested in talking about the dollar. So here's the thing. You say, oh, the dollar has declined by X percent over the last 50 years, and why aren't people freaking out about that, and et cetera, et cetera. I want to find that one. I'm not sure about those charts you pulled up, but I just keep hearing stats about how a dollar is only worth like 1% of what it was worth in the 60s, and everyone is freaking out about Powell going burr. Okay, well, it's the decline, the effect of inflation on your dollar is not as, I don't think it's as dramatic as that your dollar is only worth 1% of what it was, but that's intentional. It's the whole point. Is the whole point, guys. You have to have a certain amount of inflation. There is debate around what is the correct level. Okay, some people argue that it should be 0. I disagree. Some people argue that it should be 1%. But generally speaking, the central bankers have arrived at 2%, I believe, reflexive 2 or 3%. Symmetric target, and I think that is largely because it's like convenient for calculations and stuff, really. Okay, but because how do you empirically determine what level of inflation is the best what you can. But what we can see, for instance, if you look over the last 10 years, the Federal Reserve has had a very difficult time keeping that inflation number to what it should be. And there has been a lot of economic consequences for that. And in particular, it's really exacerbated income inequality. So, there's these effects. Yeah, the people who consume the most, the people that are at the lower end of the rung are kind of affected by the inflation more because they end up having to pay more for goods, and that paying more for goods doesn't really affect people at the top of the economic ladder, right? But if you don't have inflation, then what really happens is like the opportunities that you have and so forth aren't as good. So you can kind of see how in this past 10 years, we've had really sluggish growth and we've had really sluggish inflation, and it's been bad. So that kind of shows you what happens in a world where there's no inflation, or where inflation, it's deflationary, where things are getting cheaper. That's also not good, right? So there needs to be a certain amount of inflation, and it should be relatively stable, right? Some people want this to just be no inflation ever, and these people have never studied economics, right? They don't know what they're talking about. Inflation helps us pay off debts easily. That's another good point. And the people that bought a house 10 years ago, they benefit from the inflation, right? And then the amount of your house payment compared to the rest of your income declines over time, and that's good. Yeah. There's but more to the point, there needs to be a reason for people to spend the money, right? If your currency is deflationary, then what you get is you get Bitcoin. You get Bitcoin, where the incentive to prevent people from selling it and using the coin is so strong that they literally completely undermine the entire protocol to make it so that you'll just buy and hold it forever. Like, that's literally what happened in Bitcoin. Can you imagine if that sort of thing was happening with the dollar? You would get a recession. You would get a depression, and there would be no way to get out of it until you stopped. I mean, that was really what happened during the depression, right? Is we had a depression, and they said, no, we're not going to print more money. And things basically remained shitty until the central bank, until Eccles came in and said, oh, actually, we need to print money. and then that fixed it, right? There's a social reality that if things get so expensive that people start suffering and dying, then things need to change. Well, yes, but if you're getting 2% inflation year over year and wages are increasing accordingly, then it's not a problem. And it's, in fact, exactly what is supposed to happen. That's Evans. I am comfortable in assuming that high prices will come down when supply difficulties are handled. Is that dovish or hawkish? I don't know, but the treasuries are down a tick or two. I see Alligator said in Discord needs a catalyst. I feel the same. Like, we could have made a tick or two, but right now I don't see a reason for the treasury to be moving. I kind of see some big guys throwing their weight around, so I probably should stay out. Is there a hypothetical situation in which you would flee the dollar? I'm sure there is, but I don't know what it is. Like really, when you try and game it out, a collapse in the dollar would really only make sense in the event of a complete collapse of the United States, right? Like, if there was a civil war then maybe people would flee the dollar, right? Because the bigger problem is this. The concern isn't that the dollar is going to collapse, but the concern is that the Chinese yuan could supplant the dollar as the preeminent currency in the world. And the way that they're doing things right now, I think that there's a real risk of that. It's not like we're anywhere close to that happening at the moment, but when you kind of start to extrapolate out current trends out 20, 30 years, that's kind of where that heads, and that's not a very good thing, right? The US does need to get its spending under control. There's a lot of things that the Democrats are pushing for in those spending bills that are just absolutely preposterous. I was reading one of them that they were doing the other day because they're trying to stick something in there for immigration, right? And one of the changes that they tried to put in was that you could get the child tax credit without having to have a social security number. So right now, if you have a taxpayer identification number, you can get, like paid back your taxes and if you overpaid and that sort of a thing. But you can't get the child tax credit. You have to have the social security number in there for that. But if you can do the taxpayer identification number, then every illegal immigrant in the United States would be able to apply for the child tax credit, okay, which is like $3,000 a year times 650,000 illegal immigrants or something like that, right? These are the sorts of things that they're putting into their bill, right? And it's like a huge man. Did you see the Christian Siemna thing? So there was Christian Siemna, the senator from Arizona. The senator from Arizona was speaking to some immigration activists who were very upset with her. She had already spoken with them and then, left. And so they continued to harass her and actually followed her into the bathroom and was like recording her as she got in the stall, trying to record her through the crack and stuff like that, which is a felony, by the way. And then when they showed Joe Biden that, he said, well, they shouldn't be doing that, but that's just kind of what happens, which probably not what you should be saying as president. That sounds like a Donald Trump kind of a mistake. You know what I mean? But yeah, that's going on. And what was Sienna's great crime? She doesn't want to spend $3.5 trillion. Really? Like, come on, guys. This is what they're all getting super upset with her and Manchin about, is that they don't want to increase the federal deficit $3.5 trillion. I've heard them say it. Isn't it Sienna? Yeah, cinema. People should be allowed to use a bathroom, right? Wow. This is just kind of highlights something that we see all the time, though, right? Is that there is political discourse that happens in this country that crosses the line. And whenever it happens, the side that's crossing the line tries to excuse it, when it really should just be like, it doesn't matter what they're doing. If somebody's doing something, that it should be considered unacceptable. She's a puppet for the corporate donors. How do you know that? Okay, so like, this is a problem that I see with a lot of thinking on the left. Somebody doesn't want to do what I want them to do. It must be because they receive big donations from corporate donors. Dude, every congressman gets big donations from corporate donors. Like, the thing that's kind of silly about it is that the senators have to spend like all of their time fundraising to get money from people. But at the same time, since everybody can donate, there's like no limit to where they can get the money from. Right? if I was a senator and I had a really strong belief about a particular topic, and that's not what my corporate donors wanted, then I would find different corporate donors. Just because they're receiving money from a particular lobbying group does not mean that that money is the reason that they're holding the position that they do. And with Sienma, I think that this is very much the case. She was elected in Arizona as a moderate. I mean, that's why people selected her over the far right person. And it was like, think about that for a second. They had a pretty far right candidate that was running against her, right? And it was close. And she was a moderate, okay? So do you think that Sienma really has a lot of room in Arizona to move? She doesn't. If she voted for that $3.5 trillion bill, and she was the reason that that $3.5 trillion bill went through, that would be the end of her political career. No joke. There's no way that she would be able to go back to the Arizona voters and justify it and be able to win another election. Right? That's why she's doing what she's doing. And the people in Arizona voted her in because they knew that she would do that. They knew that she would be somewhat fiscally conservative. She could do whatever she wanted because she isn't going to run. Did she not? Is she say that she's not going to run again? Look, the reality, if you're on the left, you've got to understand the reality, because I mean, what they are painting for you on Reddit is like so far gone from what's really going on. So let me explain what the reality is. The reality is that the far left has completely co-opted the Democrat Party and is trying to push through the most expansive and ridiculous spending spree in U.S. history. And the only thing that's stopping them is two relatively moderate senators from the Democrat Party in there. And really, the Democrats should be thanking those two people, because if they went through with that spending spree, the Democrat Party would get, I mean, they're going to get drummed next election anyways, unless something crazy, like one thing that could happen crazy that could save them is if the Supreme Court rules on abortion. Okay. Supreme Court rules on abortion, then maybe Democrats are saved. Okay. They're saving Democrats from themselves, guys. and like, you really have to realize that the game that the Democrats are playing with you, because they're all saying, oh, we need this is so important for us to get in. But no, it's not. Like, if they don't get that through, guess what happens? Nothing. Everything stays the way that it is today. And that's what they're so upset about. And then there's the debt ceiling fight. They're complaining about, the U.S. is at threat of defaulting. No, it's not. No, it's not. The Senate has every ability to put up a reconciliation bill that only raises the debt limit. They can do that. They have to attach a dollar amount to it. They have to say, this is what the debt limit is now in order for it to be considered for reconciliation, but they 100% have the ability to put up a clean bill that just raises the debt limit and pass it through with reconciliation with 0 Republican votes. And you know what the Democrats are saying about that right now? They say that's a non-starter. But that's what they're going to have to do, because no Republican is going to vote for it. Why are they doing that? Why are they doing that? Because they're playing a game with you. They want you to be upset, because the reality is that they've screwed up so bad with Joe Biden that they've got to do like everything they can to try and get people excited. Neither of our parties are conservative with spending, so it's true. Well, there's a real problem here with the incentive in government to increase spending. I don't know what you do about it. In my state, what they did about it was they made an amendment that says that the budget has to be balanced. I think that should be done at a federal level. I think that's the only solution. because you can't just spend forever. The wage gap is widening. We produce more for less. More of our economy workers are service oriented. We have not spent wisely. Well, so some of that is a little bit deceptive, though. So one of the things that you're going to commonly see is you're going to see this graph that says, okay, here's inflation, here's the change in the dollar, and here is the change in workers' wages. And when you look at it starting from the 70s onwards, it just stagnates and like, oh, people are making less today than they did back then. But that is not strictly true. The reality is that people are getting paid more. It's just that it's being done in ways that don't show up in that particular chart. For instance, that chart doesn't show you benefits, right? Since the 70s, benefits have increased, and benefits is now a very significant portion of your paycheck, and that doesn't show up in that chart, for instance, right? So on one hand, you say it's fine to print money, but then on the other hand, you say it isn't. Well, it's fine to have 2% inflation year over year. But what's not fine to have is to have a really huge debt that requires so much money to service it that you now have to increase taxes to service that, right? So the problem that they're going to have in the future is that they're going to have to increase taxes to pay for all of this stuff. And that takes money out of the economy, right? So now you have slower growth because you have to maintain you have to service your debt. That's where it's going to become a problem. That's different from the value of the dollar in terms of like, you know, how many dollars are out there. They're related systems and they can affect each other, but you're kind of talking about different sides of the equation, right? You hear us leaning more towards a K economy. So you're talking about an economy where one group of people starts doing really well and another group of people is not doing very well at all. I do not see that actually. So, oh yeah, Dave. I think that Dave has it. The bearish case. The bearish case here is that for the next 3 to 5 years, that growth in the United States is really sluggish. That's the risk right now, and that's going to be bad for everybody. So, at the same time, you just got to remember, like, standard of living in the United States is better today than it was in the 70s. It just is. You know, we easily forget about all of the crazy innovations and changes that happen, right? So we're seeing a big rise in the dollar here, and the S&P 500 is cratering as it happens, and the treasuries are pushing down. So it looks like we've had another rise in interest rates, and it's probably due to the comments that the Fed speaker is having right now. But it didn't happen in a way in which I really foresaw it was going to go on. Well, you're below 27.5 now, so you could AO could buy it now, I suppose. DS has less middle class people and more poor people? Yeah, I'm gonna have to go and look at the stats on that. People are used to stonks rising all the time. Ain't happening. Yeah. Well, I was looking at my portfolio the other day because this drumming, my portfolio was pushing towards 6K. Was really hoping to get to 6K. Excuse me. Was really hoping to get to 6K. But I took a drubbing yesterday. I was slightly below 5K now. and some of the stocks are doing really poorly. Like I had a really good winner on Sumo Logic was doing really good, and since that time it's just a disaster. And yesterday was a disaster. How did your swing trade in micros go? I think I took it off at $12. So I held on to it like all day. They didn't give me the fill that I wanted, which would have been $20, but I made a little bit on it. I could have held it overnight, right? Probably could have held it all overnight, but I was sitting there like I don't see a reason for me to do anything. So probably it would have come. Let's see here. Yeah, 3.5. It would have come back to my entry, and then I would be very much in the money now, huh? It'd be like $30 in the money now. So it wasn't a bad trade for what it was. It wasn't a bad trade. I continue to be frustrated by sitting here and looking at it, and like I can see people like making moves, but like I don't want to get involved, and it moves without me. But the problem with that is that we've had moves both ways, right? So it could very well do what it did yesterday and immediately spike up to the high of the session again, right? You made a quick $62. Do you make the 4 ticks? We're going short when he said it looks like it's short. Dennis Gatrick, I reckon it's the wording that triggers people. Inflation's bad because my 1% is worth 99 cents tomorrow, so it's scary. Oh, the U.S. has 120% debt to GDP ratio. Yeah. So when it comes, so the debt to GDP ratio, from the evidence that I have seen, you could still go a lot higher before the debt to GDP ratio becomes a problem. Like I think you can get to like 200%. And beyond. Okay. But where I think that there's a problem is holding that high debt ratio for decades. That's money that's going into servicing debt that could be put to work in the economy. And I think that the result of taking on too much debt is lower GDP growth. We should fix that. Problem with the treasuries is if I miss my signal. Yeah, that's the treasuries for sure. Now on the split side, if this is really going to do its thing, like it could just go down all day, I don't know. There was a decent amount of volume on that down move, and it was very much across the board. They look pretty comfortable right here at 26.5. We might get a little bit of a reversal. We'll see if they do the thing they did yesterday where they like literally reverse all the way back up to the high of the day. Because yesterday the trade at the bottom was really better, right? What I don't understand is the premise of we should get more in debt because we pay our bills. Like, no, you don't. Why would you have debts then? 28.5 to 26.5 is pretty good. When I was doing my like the style of trading that I've done in the treasuries for most of my career, I was only looking for like 4 to 6 ticks. I was like 4 tick stop, 4 to 8 tick target. So I don't know, when you're within 4 ticks, you're still kind of maybe noise, but that move definitely had something behind us, so I would say it was a good trade. I've heard the corollary to that is that the Chinese also sort of live poor and actually do something good with their debt, like using a credit card successfully. Well, I mean, the whole thing is debt is money that you can put to work, right? So if I come in and I want to start a new business, I want to start a foam fort business, okay? and I take, $1 million loan, and then I turn around and I use that for my fort business. And then if I'm successful, I'm going to make way more than $1 million on it, and I'm going to pay that all back, and it's no big deal. And I can continue to take out debt and continue to use that to grow my business faster. And that's how you use it. And that's the way that companies use bonds, for instance, right? Like, why does a company as large as Amazon issue bonds? They're doing they're the best, most profitable company in the world, that they're taking out debt, right? Because they can grow faster using it. The problem is the United States using all of that money, the debt that we're taking on, to grow faster? Seems to me like we're not. It seems to me like we're actually starting to dump a lot of that into things that won't pay a dividend back, and are just going to make it harder for us to pay that money back in the future. It will become a drag on growth. That's also how a company goes bankrupt. Sure, but like there's within reason a country's problem. The United States is probably it's not going to default, right? Well, that is the explanation of how economic cycles go bust, actually. Well, I wouldn't go as far as to say that because of that it's explicitly a negative force. I think that you just have to realize that when you take on debt like that, you're also taking on risk, right? You're using leverage. You're using leverage to build your business. It's less risk to do something like what I'm doing with the YouTube, where we just build it as we go, right? Because I could do that, right? I could go and I could take out a loan, and I could say, I'm going to take out a loan of $30,000 to pay for a video assistant that will edit the videos and help me write scripts. And he'll be a full-time employee, and he'll just do that. And $30,000 a year. Yeah. I could do that, and I could grow the channel faster. Maybe I should do that, but I don't really feel like taking on that kind of a risk. Right? Cheap money creates all sorts of problems that ultimately lead to everything going out of whack. Well, yeah, no, that's another problem. I think that goes to what the Federal Reserve members have been saying lately, where they've been saying that the Federal Reserve asset purchases probably aren't helping. Like they've created interest rates that are really, truly artificially low. And as such, a lot of businesses have taken on debt and done things that they probably shouldn't be doing. And that would be a real problem if we had like an economic crash right now. Like we've been saying, my base case right now is that probably we have slow growth for the next 3 years. That's not the end of the world. Understand, okay? That's the way that it was after the 2008 crisis. The growth was slow for a few years, but in the longer run, it was perfectly fine, and stocks did really fine with it, right? But there's another case where we just have a really ugly pullback, like a 40-50% pullback or something like that. Yeah. And in that kind of a situation, these companies that were just piling on the debt, that they weren't very good going into the pandemic, and then they just took on more debt. Yeah, those guys are going to be so screwed. Government should not prevent weak companies from falling. Well, but is it fair? I don't know. I don't know what to do about that one, because this goes back to the whole thing about the Federal Reserve buying junk bonds. Like, should the Federal Reserve be buying junk bonds? No. I reflexively say no, that the government meddling in the markets to that degree is a problem. Okay, but at the same time, like, is it fair for these businesses to go kerplunk when it was really something that the government did that caused it to happen? You know, like the government imposed the restrictions that put these companies in a tough spot. Should those companies really have to pay the price for it? I mean, that's not fair either. Life is not fair. Maybe. But if you let all of those fail, then what is the... I mean, can you game that out? What would have happened to the U.S. economy if the government just allowed things to run in place? If the Federal Reserve didn't come in and buy the bonds and take all of the other extraordinary measures that they did, how bad would it have gotten? You know, and the problem is that when we've done this in the past, at least it's paid off, right? Like you guys are saying things that I heard a lot in like 2010, you know, where everyone was saying all of this stuff that we were doing, it was bad and it's going to come back to bite us and we're going to have a double dip recession and this, that, and the other thing. And it ended up being the greatest bull market of all time. You know, it's like the policy worked, at least during that time period. Maybe there's a comeuppance much later. I don't know. But, you know, it seems to me that these investments that the government, I believe that the government can make investments with the private sector that improve things for everyone. They can. And the government, I think, should be allowed to be an investor, an actor in the markets, just like you and me. I can come in and I can buy junk bonds. I think the Federal Reserve could be allowed to, you know, with limitations. With limitations. I don't know where that line is drawn. Maybe the Federal Reserve buying junk bonds might, maybe that should be the line, though. Right? The problem is what happens later, and where do those economic policy lead to? Well, but I would argue, Lucas, that the problem is not the economic policy at that point, though, right? I think that the problem is the fiscal policy, right? The Federal Reserve did all of the things that it was supposed to do, and they've been maintaining maximum employment and price stability. And we've had a pretty good stock market that's been growing, and it's been good for the United States. But during that time, Congress has not passed like a single budget, and they continue to have a very irresponsible fiscal policy. And what needs to happen is not that somebody needs to come in and force the Federal Reserve to raise interest rates and dump all of their bonds and everything. What needs to happen is Congress needs to do a budget, and they need to be forced to have a balanced budget, which means that for every dollar that they're going to spend over 10 years, that they have to pay for it. That's what needs to happen. It's a problem of politics, not monetary policy. Think that the monetary policies that we've had seem to be effective. Yeah. What concerns me is that we moved away from Adam Smith's philosophy that we must produce and sell more than we buy. So my dad was telling me about this book that he read. And in this dystopian future, robots make everything. And the problem is that robots make so much stuff and are so efficient at it that people literally cannot consume the stuff quickly enough to keep the economy going. And so the whole thing was about how you had like consumption quotas and you had to consume so much of stuff to keep the economy going. And I thought it was a really funny thing, because when you talk about like automation and the future economy, well, that seems to be like a more plausible scenario than the thing that the universal income proponents are saying is going to happen. Like people don't realize, like, okay, yeah, in the future, if robots make everything, then those are less jobs for people and people aren't going to make as much. Yeah, but like, so how are you going to pay for a house? Well, I'll tell you how you're going to pay for a house. A house is going to be like 1% of the cost in the future because they'll be able to just 3D print them at will, right? Like, I'll need to ask him what the name of that book was. It sounded interesting. It was like a short story, not a book, but is it just me, or are we as a society so rich that when we fail, we expect to be bailed out, no questions asked? I don't think that it's quite to that point, but there are certain sectors that have learned that they can force that, right? Basically, all of these really financially related sectors, which would be like in particular banks and real estate companies, have found that they can be as reckless as they want to be because the government will come in and fix their boo-boos. The moral hazard is definitely something we should be concerned about, right? We may eventually get to universal basic income, but we should still be responsible to use resources wisely. Well, so the thing that I think is funny is that in a way, we are moving towards basic universal income, and we always have been, right? Because if I go in and I save all of my money in my 401k and I put it into markets, and that money should continue to grow at 8% per year. And, if I'm really wise with it, then I should be able to pass a significant portion of that on to my kids. And then they'll continue to do the same thing, but they'll have a step up on me. They'll be able to save even earlier and get an even larger portfolio in the end. And at some point, you could feasibly get to a place where everybody, because of their ownership in the economy through the stock market, that everybody benefits from the stock market just going up and can live off of that income. Like, there's a world where I think that that's possible, right? What would we call it? Anarchistic universal income or something like that, right? It could happen, and there are these situations where, like, for instance, in Alaska, people get income from the oil drilling there, for instance, right? Like, the world where you really don't have to work is possible without giving government complete control over the economy. Right? Like, that's the thing that I think is so funny, is that is just going to happen on its own. Like, everybody's concerned about, all of these people, they won't have jobs. It never works like that, guys. It never works like that. People aren't just going to sit and starve, right? They're going to go and find ways to be productive. And probably what's going to happen is new industries are going to come along. And there's going to be more people in the future that are going to be able to make money from having a YouTube channel or making crafts than from a traditional job. And that's good. And things will be cheaper. So the risks in starting those kinds of businesses will be less because your costs are less, right? Can all be positive. All of these problems, this is where I think I really differ from the majority of people out there, especially in the political realm, talking about this sort of stuff. So when I look at these problems, I see, well, yeah, it's a challenge, but I think it's going to end up to our benefit in the end. Well, everybody else is always predicting a doomsday scenario, And that's the same thing for the market in general. I very much remember in 2008 to 2010, everybody on the internet was bearish. And if you listen to all those bearish people, you missed out, you know? And it's even today, like, yeah, and don't get me wrong, there's some real risks to the economy in the short term, going until like the end of the year. And this like stagflationary risk is in particular is really kind of concerning. But I don't think that that's the end of the world. I think that we're going to keep coming here every morning and keep trading, you know? And in the end, the economy will continue to grow. And all we got to do is just hold at bay these crazy people that want a civil war or something crazy like that, right? I hate plastic water bottles. Oh, I spent all morning yesterday trying to find the perfect glass water bottle, because this water bottle, which is very good, by the way. Who was it? Who was it made by? I forget who it's made by. Zulu. But the cap broke. And I keep having these problems where they're like these pop-off caps and they break. So I found a water bottle that I think, and it has the borosilicate glass. Because apparently there's two kinds of glass, and borosilicate glass is more expensive, but it's better. By 2050, scientists say we'll have more plastic in our oceans than living sea creatures like fish. I don't know. This is one of those areas where I'm really concerned about plastics. But there's not really a whole lot of research for us to go based off of this, right? We know that BPAs disrupt hormones, and that even regulation acceptable levels of BPAs can negatively affect you. Should I be as concerned about it as I am? I don't know. But I'm like, I only drink out of glass. I don't let my baby drink out of plastic. The Civil War chatter is very real online. I know people who live in Texas, and they're hinting that something is happening soon. I'm concerned about some event happening sometime soon. Yeah, but you know what? This the internet. You win, you know. I think that when you see stuff like that, the first thing that has to go through your head is, yeah, but it's the internet, and people say stupid stuff on the internet, and that stuff almost never happens, you know? Like, it's a really big gap to bridge between people talking about it and wanting it to happen on the internet and actually doing it. Because when you actually start to do it, all of a sudden, all of the negative consequences that are going to come to you are like right in your face, and you're going to be like, maybe not, you know? What the heck is Michael Burry tweeting about? The whole sleep industry, mattresses, pillows, toppers, etc. is built on a mountain of obstructive sleep apnea. Better to get seen for that. What? What is he talking about? Is he saying that if people didn't have nice beds, that they wouldn't get sleep apnea? Please don't short beds. I'm rarely long in there, but still. Oh, the comments on his thread are funny. Okay. Okay, well, Michael, I'm just going to chalk it up to Michael Burry as being autistic again. That would be fun. It wouldn't be fun. You can tell that I'm not I'm not in on the Civil War thing because I think that if there was a Civil War, that my state would be like one of the key battlegrounds. Because it would be the Western Front, and it would be Utah, Idaho versus California, Colorado, and there would be a war over water rights. It would be ugly. No, thank you. No, thank you. Let's just work it out like civilized people. Like, here's an idea for our conservative friends. Here's the plan. Okay, here's what we're gonna do. A year from now, there's going to be an election, and we go and we vote. And we vote out all of these stupid Democrats and take control of the Senate and the House of Representatives away from Democrats so that they can stop doing all of these crazy things. And then there will be no reason for a civil war anymore. That's what's going to happen. That's what we're going to do. You might benefit from getting acquainted with the Austrian School of Economics, which explain a lot on this subject. Okay, so there's a problem with the Austrian School of Economics. The problem with the Austrian School of Economics is that they have a lot of really interesting theories that fly in the face of the generally accepted economic theories of the day. And because they are the outlier, the policy that doesn't get implemented, there's basically zero empirical evidence to back up any of their claims, right? Like we can look at the Keynesian School of Economics and we can say, okay, so governments, based on the Keynesian School of Economics, have gone out and done stimulus, and we can see that when they do stimulus, these are the effects that it has on the economy and so forth. And so we can kind of, basically we get some validation of these theories, and so it's like way more developed. The Austrian school, they don't have any of that. They just say, well, this is what we think should happen, but they can't prove it. You can't prove it. You get what I mean? This is I was having this problem the other day, man. I forget the name of the guy. You're gonna know who I'm talking about. So a week or two ago, Futures Trader 71 had a webinar with his expert that talked about the repo crisis before, talking about rising interest rates and all of these sorts of things, right? And his expert basically says, well, what the Federal Reserve does doesn't actually matter because it doesn't actually change rates or the amount of money in the system. The banking system are the ones that control that, not the Federal Reserve. And therefore, the Federal Reserve can say what they want. It doesn't matter to interest rates, right? So basically, he has this elaborate theory that flies in the face of the conventional wisdom that has zero empirical evidence to back up, right? So he goes and he does this webinar, and what has happened since that webinar? Because he was basically saying like rates are going to stay low because the economic growth prospects in the future don't look very good, right? And what happened? The Federal Reserve came out and said we're gonna taper asset purchases, and interest rates rose. So if you were really, he did not help you catch that move. You get what I mean? And what is the problem that I have? It's not like I think it's a bad theory or anything like that. It's just like, what is the empirical backing for it? And when I start to go and look for like the empirical backing for it, I see there's some things that he's wrong about. For instance, he says, well, what the Federal Reserve does on these policies, they don't really affect things because it's the banking system that creates the money, not the Federal Reserve. Well, it is true that the banks are the ones that lend the money out. But what the Federal Reserve does is the Federal Reserve allows them to make more money by giving them the deposits, essentially. Well, not the deposits, the reserves, right? I know when I worked at the bank, and they were talking about doing QE2 or whatever it was. The guys at the bank were excited because they knew that they could create business off of it, right? Because basically what it came down to is, we have all of these extra reserves, so I should go and call my buddies up at this hedge fund and this hedge fund and try and sell them on doing this trade. Like that's like literally what happens. That Federal Reserve policy, when they do that, it directly results in market activity that the banks literally create. And we know that orders are what moves markets, right? So that's the way that it works. And this is not what the guy was saying. I was like, I don't think they're just going to help you. They can prove their thesis by proving how the crises are creating and then watching how they develop. Well, now you're going to have to get into a specific theory, huh? At the moment, I'm having a hard time remembering what the specific tenets were that I felt seemed to be a little bit off kilter. I think one of the problems is that in the Austrian School of Economics, they kind of look at the markets as like this beast that like you can't understand, right? Like their whole thing is like you can't understand the markets or control it, and trying to do it just causes problems. But really, I think that what it is that they don't understand that orders are what moves markets, and that a lot of the behavior that you get is just a result of the market structure and how a limit order book works and so forth. But more to the point, I guess that the issue would be when we had an economic crisis, the current policy is economic stimulus through both fiscal and monetary means. And the Austrian School of Economics says you shouldn't do that. Well, I think the evidence is in favor of the Keynesians right now. You could go and you could get a government that was Australian, and you could see what they would do. Sorry, what do you mean by they don't understand orders moving markets? They explain economics, not trading. Well, but it is the same thing, right? So there's this whole thing. I think the really big problem that the economics is trying to solve, like the thing that's made this difficult, is that you can come in and you can say, okay, here are all of the economic factors. So based on these economic factors, we should be able to predict how things are going to play out, right? And when you start to do that kind of a thing, you might find models that are pretty effective, but they always fail at critical points. And it's like, well, what's going on? Like, why do we have such a hard time predicting the future using our economic models? And the reason is because those economic models aren't based on the fundamental truth of the markets, I think, which is that orders move markets. So the market doesn't move up or down based on the economic factors. The market moves up or down based on people buying and selling it. And if you know why people are buying and selling it now, some of the reasons that people buy and sell it are because of those economic factors, but some of them aren't. And those dynamics, you could have a situation where market moves contrary to economic fundamentals because of a short-term supply demand issue in the market. Okay, there's the PMI. That's funny that I was forgetting about that. Okay, you can have a situation where market goes against the fundamentals because of a short-term liquidity issue. But then when it does that, that triggers all sorts of other things, right? And now all of a sudden other people are buying it because of reasons. And now you can get something that creates its own situation. And in fact, actually influences the economic factors and could create a recession or a strong growth period. Based not on any economics, but just because of the market, you know? You thinking about going long now in ZV? Well, so we just had the PMIs. So market services PMI 54.9 versus an estimated 54.4, and the market composite PMI 55 versus 54.5. So both of those were slightly higher than expected. You can see that the Treasury is responding to it a little bit. They came down maybe 2 ticks, right? So the E-mini seems to be liking it. That could put some pressure on the Treasury. So I think at the moment that a long in the Treasury probably doesn't make much sense. But more to the point, we're going to get another set of numbers here in 15 minutes at the top of the hour that tend to be, those ISM numbers tend to be more influential than the market ones. So I think that I still don't see a really strong reason for me to want to get involved. Is what I'm thinking right now. That's a micro there explaining macro. I don't think that you can really separate them, right? Like, I think that all of this, the problems in our space really come down to understanding that. That's the piece of the puzzle that once people start putting in that, all of a sudden you're going to be able to make good predictions. And I really don't like him being like, oh, I want to take a long. Do you think I should take a long? Do you think? No. It's all that matters is, do you think you should take a long? But here's the question. Why? Why is it? So, and here again, we should go back to the theory that orders move markets. So, what is going to cause orders to come in and buy the Treasury after you buy it? What is the thing that's going to make that happen? Do we really have a reason to think that they're going to come in? I don't think so. Because, like, let's say, for instance, I went short right now. I could maybe justify going short, right? What would be my reasons? Well, one, because I think that people are going to sell the Treasuries because they liked the PMI numbers. Clearly, I don't think that that's a strong enough catalyst, but it could happen. I also think that the longer term pressure is to the downside in the Treasuries. You can certainly see that today, that the interest rates are rising, right? So I could maybe justify going down by saying, because of these systemic pressures, we're going to continue to go down, right? So if that's the situation in the market and I want to go long, then I have to have like a real reason to think that it's going to come back, right? Now, that reason could be, well, we've created a liquidity hole and the meta order is ended and they're going to rebalance or something like that. Like I could maybe make a trade on a pullback, right? But you think you can model macroeconomics from these micro interactions in the markets? Yeah. So I think that what you can do is you can go in and you can say, okay, here is this manufacturing number, right? Based on this manufacturing number, how many orders do I think should come into the market as a result of that number, right? How much business does that create? How does that create the orders, essentially, right? It's easier to do it for some things than for other things. But like particularly when it comes to monetary policy, right? I can come in and I can say, okay, the Federal Reserve is going to come in and buy X number of treasuries, and I can measure the impact on the market, see what that's going to change the interest rate to, and then analyze the change in the interest rate across the rest of the economy to see what the effects will be. Kulud thinks that short term the market will likely move up in ZB. Well, they came back to the low of the day. They're eating into it. E-mini's moving up right now, but E-mini's having a hard time making a new high. Backing off just a little bit, at least. Okay. So, something that interesting that happened there in the ZN, right, is there was a 3.5K iceberg on the bid. They ticked down, okay, like 1,300 right now. I think back then it was 1,300 too. Then they ticked back up, and they were able to find those 1,500 orders come back and stabilize quite easily. And then they pulled when another order came in and sold it. So it looks to me like the queues for both the bids and the offers right now are pretty stable and are able to recover quite quickly. So they're, see how the 26.5 is now already up over 2,000, and then while it pulls back, okay. See, it seems to me like people are willing to provide liquidity in this area. So that's interesting. Now 3K. Are they going to try and take out this 5K at 27? I mean, that would be something, that would be unusual. Well, they they stacked up to 4K and a couple of them started going into it. Okay. Well, it was 5K at one point. It looks like that they'll be able to clear. They didn't get enough orders, but they could have cleared it with 3K. Okay. So there's a little bit of games, but there's still plenty of liquidity to deal with the transactions that are going through here in the treasury. So I'm not really seeing like an imbalance at the moment that really concerns me. Okay, now that time they ticked down really strong stack 3,500.
Block sell.
Ah, okay. No, probably not. This one, I probably missed it, but when I said, oh, okay, they ticked down and it was big, I probably could have taken the one out there. Yeah. Okay. Well, they really plowed through it too, didn't they? I guess they kind of would have had no choice, though, with the way that the E-mini is trading at the moment. The issue is that this news that comes out in 6 minutes could be completely different, right? Yeah, well, they shuffle it around. You gotta be careful with what you're looking at though, Kool-Aid, because it's always going to show. It's literally always going to show that whichever way it moved that they pulled in that direction, but that doesn't necessarily mean that that's cause and effect, right? It can change so quickly. I think that's mostly just the liquidity reacting to the market orders that are coming in. and some correlations. So like on that particular move, Japanese yen moved, and that they're pressuring lows of the days, right? Well, they don't look like they're done yet. Did we, by the way, were we 45? I guess we had plenty of time to have gotten long in here, but I would say that the reaction to those PMIs seems to be more than I anticipated, right? Yeah. Well, it's interesting to me that up here there was like this big 5K and they just like completely pulled. and then it came back through and they traded down. That says to me that when that sort of a thing happens though, I'm thinking there's probably a correlation, right? Because if you're trying every time that there's a strong tick down and you get that and you try and take a trade, that doesn't work. I've tried that. I tried that one before. The strong tick is a good sign for direction, but it's better to know which way is it going to go. I guess in that situation, you could be stocking short, right? Yeah, but that doesn't mean that that's what caused it to happen or that it's a predictive signal, right? Like I said, look at what's happening over here. Look at this 6J1 when that happens. Actually, I bet we could, well, I don't know if I wish I should focus, but we want to go back and look at that. Say, okay, what was the Japanese yen doing when that happened? And I bet you can find that the Japanese yen ticked down. It might have been why some of those orders pulled. Okay, so iceberg at 25. Well, yeah, but you're talking about a bunch of things that I've like we went and we got spreadsheets and we tested for 2 months, right? And really are not as predictive as you're making them out to be, right? I'm pretty sure that the strong tick was one that we had on that list. Okay, so this time for the ISM number, there's significant pulling ahead of the number, right? So this is going to trade like a big move. That services PMI is the main number that we're going to be interested in. Is it? No, wait. ISM services PMI. Yeah. $50 non-manufacturing PMI 59.9 is the expectation. Oh, that moved it down. Okay, very, very big beat. Very big beat. So that's real good. You mean you should move off of that? No. What exactly did you just? So I tested if you tick up and the bid solidifies very quickly afterwards, what happens afterwards? So it was one of the things that we tested. Well, darn. Let's see if it looks like they still got a hole here they kind of have to fill back in. Look at that. Similarly, I've also looked at like if there's a significant pull, because we got this thing over here, I can look at it and see like if 2,000 pull all at once, what does it tend to do? So if you say that that's not the same, then the only question would be, okay, so you could list out, and I'm sure that you're not going to, but you could list out what the things are. How much data do you have to show that that's actually a thing? I'm going to come back harder than that, huh? 25. You went long on what? Aren't you glad that you didn't go long the bond? I only looked back on 6-month tick data. Well, that probably is not bad. I mean, I suppose that that's enough to trade off of, but would still want to be careful about it, right? Because the risk is that it's regime dependent, basically. Both sides willing to put up right here, huh? That's curious. Maybe if you went long down at the very bottom. Even if it is a regime, yeah, that's probably. Yeah, that's what I was saying. Like, probably has been not too bad then if you tested it over that time. Well, actually, I take that back because you know, since that Federal Reserve meeting, I would say that we're in a different regime. It maybe hasn't affected that that signal. Anything that's a technical signal, though, has a really good chance of disappearing, though, on you. Okay. Wow. So let's come back here. These numbers. Manufacturing prices played 77.5. New orders 63.5. Non-manufacturing employment 53.0 versus the previous of 53.7. Okay, so then the numbers look pretty good. Typical comment in the ISM services report, still experiencing very strong demand. Supply chain is still a challenge. So you can kind of see that like the liquidity is willing to stack, but they pull if the orders start coming through. Yeah. Well, this could be like the typical trade that I've seen where you get the big news and it really pushes initially and then reverses after. This the Treasury has been doing that a lot lately, hasn't it? Okay, so a big stack now. That did just happen there, right? 25 half, yes it did. 2K orders stacked at 25 half. Oh, that's no good.
Block sell.
Oh, really? Really? Well, that was I think they fooled us there. Well, I mean, you maybe didn't take a trade, but did you see how it was like, okay, there was a 7K, it pulled, kind of looked like maybe we were going to tick up, and the bid at 25 was looking firm, and then all of a sudden, block sell comes crashing through. Oh my. So 4K. Yeah? Oh no, it was the 3K. It was the 3K. The VIX is down 3%. I feel like that the S&P 500 is a better trade right now, huh? maybe I'll just YOLO it here and be like, whatever happens. they come back on me in the E-mini. I'll average that one out too. By the way, we are steepening through this. Okay. So we're going to watch ZB there. It seems like the sellers have the advantage, but it also kind of looks like they kind of having trouble coaxing them into the orders coming in. There we go. Okay. Good. You like the new background, Brandon? Thank you very much. I think it looks a little childish, but we'll improve it over time. We'll improve it over time. Just a healthy market squeezing up. Yeah, that the ES is probably going to reverse all of yesterday's move, huh? I think that looks like 4340 is definitely a spot. Now remember, 4350 is where the moving average is. So I don't know. You think that they can get there? I wish I had kept my long from yesterday instead of taking it off overnight, huh? Because I couldn't really justify a trade in there on all of this stuff down in here. But if I was making a larger play on a swing, then I could maybe justify staying in. Okay. So we are seeing, by the way, on the sell side, some situations where bids are putting up relatively decent resistance, and they just smashed through it. 5K traded there at 24. Looks like they're going to hold 23.5 for a moment at least. Oh, there they go, and they smashed through that one too with 5,800 orders. And again, keep an eye, watch over here. Look at this 6J when it happens. Oops. Let me recenter everything so you can track it. Dollars coming in strong there too, huh? Almost back to 94. Almost. I think they'll get there, but Indus is on fire, yeah. It's funny, when I was there in the E-meeting, I was like, I don't know, I only think that it's going to go up, so I'm just going to take one and use a Y. I haven't had to do anything. It never went against me. Just so the treasuries are still being a little tricky over here. The easy trade is the E-mini for sure right now. Let's just note, though, in the treasury, there does appear to be some profit taking. Now, in that situation, the 6J ticked down and the treasuries ticked up one tick. Hello, Kyle. How's it going? We're just looks like things are popping today. I'm really wondering, like, can the S&P 500 make it to 4350 today? I mean, based on how far they've been moving in the recent days, it's certainly a possibility, right? Sure seems far away right now, though, doesn't it? Okay. So we're seeing a little bit of flattening come back, right? I don't know. It looks pretty heavy at 23.5 right now. Six J though is just like, ooh. You say long in ZB? Well, it is being a little, how do we say? It kind of seems to be resisting it. So I was saying, like, we're getting this flattening coming back in. It's steepened considerably after that news, and now it seems to be balancing back out, trying to balance back out. And you can see, like, the 10-year and the 5-year are having a hard time getting anything to happen when they take 23.5 offered, because the ZB is just staying up there at like 11 and 12. So I'm going to minimize the Z because I'm more interested in what the big orders are at the moment. Ooh, E-minis is just all over the place. Is that because the E-mini is really moving a lot right now, or is that because I've just been watching the treasuries so much and I'm looking over at that and it's making me seasick? So treasury kind of is looking to me like it's settling into a hole here. Yeah. What? I don't get how bond futures are priced like CN is priced like if you buy a T-note by the end of 10 years. No, I don't think that that's how it works, actually. But why ZN drops when 10-year yields rise? Well, prices, just remember, prices are oppositely correlated to yields. You have a profitable day so far? Good. I would hope, especially if you're trading the E-mini, you should probably be able to pull something out of this today, huh? Seth called me. I mean, I don't know if I really called anything today, man. What am I doing? I wait for the news. I see the market reaction with the news, and we're just trying to jump on board, right? Breaking news. Senator Joe Manchin moments ago did not rule out a $1.9 trillion to $2.2 trillion price tag on a social safety net package. And the E-mini, a small move up on that. Oh, I said yes, it was the place. I guess we could call that a call. Sure. The open question, I think, is still 43.50. What do you think? What do you think? Here, let's do it. We'll do a poll. 43.50 question mark. Yes, no. Ask your community. Where is it? Is it not showing up? Oh, there it is. There it is. Put your votes in now. Sounds goog for MNE. What? Okay, so the face value of ZN is 100K. Just priced at 130 and you saw those by the end of the contract, you would receive 130K. Were we talking about a 10-year? Well, if it's a 10-year, where you're supposed to be making 1.534% every year. Buy a little, Seth. What do you mean? to really, so the issue that I'm having here, Kyle, is that to do all of that stuff, I don't think that you just like eye it and kind of, it's not that simple. Like, you really should be going in and looking at like the formulas to say, it's going to be, it's going to be, let's see here. So let's say 25 divided by 32 equals 0.781.25. So 131,781.25 thousand dollars times e to the 1.534. Oh wait, e to the 10 times 1.534, right, equals. No, I did it wrong. I did it wrong, but that's how you calculate it, right? I input it into the calculator wrong. YM looks very strong. Look at the E-mini just go. Wow. How many? 60% of you guys say yes. Out of 5 votes. So, oh, come on. There's 21 of you here. Vote on whether you think ES gets to 4350 right now. Poll in the YouTube. Top number probably doped by inflation, says Alligator. Yeah, so I can definitely see that the treasury has slipped into a little hole here around the 24.5-25 area. So I'm surprised with the way that the E-mini is pushing right now that there's not more sell side pressure on it, but I vote present. You took profits. You're not going to wait for 43.50? I thought you were a believer, Lewis. No. He's probably watch. He's going to get out. He's going to make all his money, and then the ES is going to completely reverse, and I'm going to lose all of my sim games over here. Going to lose all my sim gains in the E-mini. Paper hands. Yeah. Listen, I have no problem being called paper hands. Like, listen, as I'm preserving capital here, right? You made 20K on that, really? Oh man, you really went long then, huh? It's interesting to me, like the The market number, I really felt like that they overreacted to that number. But then the ISM number, that was a good number. That was a really good number. So I'm wondering if maybe some people, like, that were making a bet the whole time that the ISM number was going to be good, and that's why when the market number moved, it moved more than expected. Because the market maker knew that was probably what's going to happen and just kind of pulled out of the way. Well, the 30-year slip. No, actually, 11 is where it's been, right? Now it slipped down a few ticks. It looks like the steepening is coming back in, though, right? 30 years down 3 ticks. The 5 and 10 are only down 2. Oh, and it's going. Yeah, this steepener is coming back, which might mean new lows. A 6K bid at 23.5. 6K iceberg. So you're still seeing like pretty big orders on the bids, and they just like, I don't know, the market orders are able to get through them. Look at that, 7K now. That one might end up being a 10K, right? ISM seems to strengthen the transitory scenario, which shouldn't lead to rate hikes, so it's more balanced now. By the way, on your guys' long on AO, no, who was it? It was on Khulud's long on CB. Did you ever take it? I'm wondering if the size that we're trading on the bid in the 10-year is related to a spread trade, because if we're seeing steepening, then they're going to be selling the 30 and buying the 10, selling the 30, buying the 5, right? So if you're going to buy the 5, if you're going to buy the 10, you might as well sit on the bid, right? Like, you're expecting that side of your spread to lose money anyways. You're going to buy in here because you know that there's a good chance that you're going to get filled, and even if you had huge icebergs. And so we may need to discount the amount of size that's trading on these bids here. Well, if they're trading big offers too, that's interesting. I don't know what to make of that now. So when you're buying T-Mopo notes, you're committing 130K. I mean, that part I'm pretty sure is correct. Yes, Kyle, that if you were to go and buy the T-note in the cash market, that you would be spending $130,000. Prepare to plunge on ES. You think it's going to do that? I don't know. You know what's a funny thing in ES? That's something that really screws up my read in a situation like this was like when we came off of the highs there, when we went from like 43.45 to 43.40, that to me was like kind of discouraging, right? Like I was like, oh, that was a pretty ugly sell there. Maybe they're not going to get to 43.50, right? But then like when you look at the chart, it's like a small little blip in the overall trend. So like the amount that ES can move these days is so hard that I'm really having a hard time adjusting to it. So why do prices fall when yields rise? The T-note seller is lending. No, what? The T-note seller. Okay, no, nobody. Okay, so the person that buys the treasury note is lending money to the treasury. Okay, so if the interest rate rises, then you don't have to spend as much to make your money, right? Okay, that was a pretty good break of the lows in the 10-year. But the person who lends is now losing money as yields rise since he bought the 10 years at a lower interest rate. That's correct. I mean, if he holds it to maturity, then you make that back. But in the short term, yeah, he's losing money. On what he marks to market, he loses money on it, yeah. Because that treasury prices moved down. Because the interest rate is higher now. Why would you want to buy one that yields 1.5 when you can buy one that yields 1.544? DS was a good show a few minutes ago. Well, I mean, if it gets up to 43.50, I think that would be a good show too. That's the thing that confuses you. So there's an issue with the OBS YouTube plugin that if I put the poll in, it cut. I'm going to close the end poll because there's no more people putting in, but it covers up the chat. So after 8 votes, you guys said 62% no. Okay. Well, the ES might be turned around and they're saying like, oh no, the yields are getting too high again. Should we reset? Okay. A lot of gay bears here. You guys never used the smileys. I put a lot of work into making a gay bear icon for you guys. For everybody that joins, if you click the join button, you can join for $1 a month, and then you can use the gay bear emoji. But nobody ever uses it. You didn't know? Yeah, there's also a money printer icon. Here, I will demonstrate. I will demonstrate. See? Gay bear, money printer, money printer, money printer. And all of this and more can be yours for the low down, no expense price of $1 per month. And frankly, I would make it $0 per month if YouTube would let me, but one is the lowest they'll go. It's a proud bear. Is that what it is? We should call it the proud bear. Okay. Okay, well, things have really slowed down for now in the Treasury. The ZB seems to be the one that's pulling them, and he's still sitting down at the lows, but the Treasury, at the very least, kind of came back a little bit, right? This is going far. What's wrong with that? I mean, if I didn't, it's just bear, right? It's just a bear. SPS bear. It's the gay pride bear, yeah. I mean, I tried to keep it sensitive, right? But just going along with the commonly accepted Wall Street bets terminologies in culture. It's funny because gay bears are actually very proud of being both bearish, and it's so true, Kyle, right? Can you imagine being a bear on a day like today? Whew. There can't be very many of them, right? You're a non-binary bull, okay. Well, I'm thinking I'm going to take one contract off here. So I would really like to try and swing this if I can. Because we got like a jobs number at the end of the week and everything. 30 years plunging. Yeah, it is. This is, I think that this move here in the treasuries is a really good example of where you've got to be careful about where you're watching the order flow because of the spreads. Because if you were watching the 10-year, you would be looking there and you would be seeing 6K, 8K, etc., 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 and thinking, oh man, like the 10-year doesn't want to go down. Maybe they're going to hold it. Maybe they're going to reverse, right? Well, once you realize that flow is all spreads, then in reality, those icebergs are not a good sign, are they? Woo! Shouldn't have taken it off. Oh well. Should have left them both on. I'd be at $30 now. Oh well.
But seeing all those big orders down there, that's not good, because what is the spread trade? The spread trade is a steepener. The spread trade is a steepener because the risk premium for holding the 30-year isn't high enough because of the growth prospects, and that's changing and that's reversing. So typically speaking, when interest rates rise, the yield curve tends to flatten, right? Like you tend to get I don't have my draw, right? So typically what you would expect to see is here's a yield curve, and then we would expect all of the yields to rise, and the 5-year would rise more than the 30-year. So when interest rates are rising, they tend to flatten, right? But what's happening is that normally the curve is like this, and right now it's like this, right? There's this gap in the 30-year. So the 30-year is coming up. So when the interest rates are rising, they've been making the play that they steepen. So when they're steepening, where are you going to take the trade? You're going to sell the 30 and you're going to buy the 10 and the 5. And so what are you seeing? All these huge bids in the 10. And when I see those huge bids, I'm not saying, oh, that's where it might stop. Because that's not what it means. It means that more people are adding on to the spread trade. It's almost like a continuation signal in that respect. But really, if I want to see when we're going to go down next, I want to be looking at the 30-year, right? And if the 30-year backs off, then maybe, or it runs into a hole, maybe then I want to take some off, right? Bits are like reloading, cover me, yeah. Anyways, it's a mistake that I made so much when I was first starting out. Was I would only look at the 10-year and I would say, oh, okay, there's iceberging there. That means we're more likely to move up. Or then, I would try and fade a move like this, because I thought what I was seeing in the 10-year wasn't, but it really wasn't. It meant the opposite of what I thought because of the spread. E-mini did extend the highs there a little bit, by the way. Tell you what, I'll put the take profit here right at 43.50. Actually, no, I'll do it at an even $100. Plus one for the commissions. Plus one for the commish. You think that they'll get there before we end the stream? Okay, well, the ZB kind of seems to be suggesting to me that they're going to come back a little bit. It looks like they traded a bunch at 01, but there's, well, okay, let's see. There might be a hole at 01, but there might also be kind of a magnet here at 04. I suppose if E-mini is going to go and push for new highs, they won't be able to do it, but should also keep track of this 6J, right? 6J is still sitting at its lows. What about gold? Is gold moving through it? Gold did not really move through all this. Just, well, I mean, down, but back to 1750. Oil up. What about Kappa? Hey, Copper likes it. Copper likes it. Okay. I think everything is generally in line for this to just continue trending. Okay, Alligator says that's S2. See this spread play in currencies as well because of swaps and non-deliverable forwards in Brazil's. Gringos need to sell dollars here to get the yield difference between our treasury and the US. Oh, he had the limit on the +3 ticks, but it didn't get filled. I see.
So we got to come back here before we go today, because tomorrow, what do we got? Tomorrow we got ADP non-farm employment change. The previous was 374K. Let me pull it over here. Let me pull it over here. Cut out that big change. Okay, so last time around they missed big, right? They were expecting like 600. We got 374. Now they're forecasting 425. So the forecast is pretty easy. That's a pretty easy forecast, right? What are the chances that they beat that one out? Especially when you look at the ISM number, right? Like, let's go out to the week. When you start, because all these numbers are related, right? There's the ADP, and then on Thursday you get the unemployment claims. Now, unemployment claims, they're looking for 350. They're looking for 350. Okay. Unemployment claims, that hasn't really been missing a ton. Like when we were looking for what 360, and we got 325, and that was a big miss. So but when you kind of put it all together, and then you look at the non-farms, which is also a really relatively mild estimate. Let's zoom in on that one. Right, they're looking for 425, 490, right, which would still be less than the last 3 months before September, during the summer, right? Like, that's, see what I mean? So I can really see the bet that because that number was good, that the rest of these numbers will also be expectations. AO gonna head out. Yeah, we're gonna be ending here in like 8 minutes. I do wish that I had taken that off. If I had taken that off at here, was it 51? Could have gotten 30. That would be an even better. But we may still get some places where we could pick up a few ticks and kind of improve our position a little bit better. Come on, E-Mini, you got 8 minutes. You gotta do it. Just for me, just this one time. Not just this one time. You know what? If you're gonna be particularly nice to me, E-Mini, don't do it today, because I don't need it today. Do it to me on a day that I need it. But you know, it sure would be fun for the stream if we hit that target before we have to go. And it does look like that CB is kind of settled into a hole where they don't really want to put the liquidity up anymore. You see that the orders pull really quickly, and they don't recover back over 2,000 as quickly. Like they're not anxious to put liquidity up anymore. Especially not the bids. Oh, almost. Come on. Almost there. Does that count as 43.50? Oh, see that? They ticked into me, but they didn't fill me. You're about to put 6K now. Do you think that they are still safe? You know the rumors they would close doors. I don't think so. So when the pandemic was happening, there was kind of a little bit of, a little bit of concern over them, but I don't think that they would ever go kaput, right? What happened, and what happened was they increased the margins on everybody, right? So unless like somebody really takes like a truly catastrophic loss that they can't cover and the FCM can't cover, which would be a really unprecedented situation, but that's always a possibility, and that's a risk for any broker, right? But no, I don't see any reason to be particularly concerned about them. I actually kind of sit here sometimes and wonder if I really should have left them, because I liked the rhythmic data. The rhythmic data was nice. Yeah, if they survived March last year, I think they're doing fine, don't they? Yeah. But by the time you burn through 6K, I don't think that you're going to have a worse thing than March of last year. Exactly. This guy on Twitter that I follow, 10-year yields, I spot a trend. Oh, really? I'm going to end the stream right here. I'm going to go post a tweet. I hope you guys all made money today. I think that it had fun. Yeah. So I will see you guys tomorrow. I hope that the rest of the economic news this week continues to be good. In the meantime, stay profitable, friends.